Have you ever heard of BlackRock? If you're into investing, you probably have. We're talking about the world's largest asset manager, a financial titan with over $10 trillion under its belt. That's a number so big it's hard to even imagine. To put it in perspective, it's more than the entire economies of Germany, Japan, and the UK combined. When a company this massive makes a move, the whole world pays attention. And recently, BlackRock has been making some very interesting moves that have everyone from Wall Street analysts to everyday investors asking one big question. Is BlackRock pulling its money out of America? Let's unpack this. The idea that BlackRock is completely abandoning the US market is, to be blunt, an overstatement. The US is still the largest and most dynamic economy in the world, and it remains a cornerstone of BlackRock's portfolio. However, what we are seeing is a significant strategic shift, a subtle but powerful change in direction. It's not a full-scale retreat, but more of a strategic pivot. BlackRock is increasingly looking beyond American shores, diversifying its investments into international markets. And the reasons why are sending a clear warning signal about the future of the US economy. So, what's driving this global pivot? It's not just one thing, but a combination of factors. First up is the issue of slowing growth and rising inflation in the United States. Think about the last couple of years. We've seen prices for everything from gas to groceries skyrocket. To fight this, the Federal Reserve has been aggressively hiking interest rates. While this helps cool down inflation, it also acts like a brake on the economy. Higher interest rates make it more expensive for businesses to borrow and expand, and for consumers to spend. This can lead to slower economic growth, or even a recession. BlackRock sees this and is essentially hedging its bets. They're looking for economies that might offer more robust growth potential in the near future. This brings us to their second major reason: the hunt for higher returns. Emerging markets are becoming incredibly attractive. Countries in regions like Southeast Asia, India, and parts of Latin America are experiencing rapid industrialization and a growing middle class. Think of countries like India, with its booming tech sector, or Vietnam, which is becoming a global manufacturing hub. These economies are growing at a much faster pace than many developed nations. For an investor like BlackRock, which is always seeking to maximize returns for its clients, these markets represent a huge opportunity. They see a chance to get in on the ground floor of the next wave of global economic expansion. Then there's the big one: geopolitical risk and diversification. The world has become a much more unpredictable place. Tensions between major global powers, trade disputes, and supply chain disruptions have become the new normal. The old saying, "Do not put all your eggs in one basket," has never been more relevant. By spreading its investments across different countries and regions, BlackRock is building a more resilient portfolio. If the US economy stumbles, or if geopolitical tensions escalate in one part of the world, their investments in other, more stable regions can help cushion the blow. It's a classic strategy of managing risk on a global scale. Let's look at some real-world examples of this shift. BlackRock has been pouring billions into infrastructure projects outside the US. They're investing heavily in renewable energy in Europe, building new data centers in Asia, and backing technology startups in Latin America. A particularly interesting area is their focus on Japan. For decades, Japan was seen as a story of economic stagnation, but recently, with corporate governance reforms and a renewed focus on shareholder value, Japan is experiencing a renaissance. BlackRock has been a major player in this, increasing its investments and even taking on a more active role to push for changes that benefit investors. This move into Japan is a perfect example of their strategy, identifying undervalued markets with comeback potential. So, what does all of this mean for you, the individual investor? Should you panic and sell all your US stocks? Absolutely not. But it is a wake-up call. The strategies of the world's biggest investor offer valuable lessons for all of us. The first lesson is the importance of global diversification. While the US market has been a fantastic engine of wealth creation for a long time, it's wise to consider having some exposure to international markets. This can help smooth out your returns and protect your portfolio from downturns in any single country. You can do this easily through international index funds or ETFs that track global markets. The second lesson is to pay attention to long-term trends. BlackRock isn't making these moves based on today's headlines. They are looking years, even decades, into the future. They see the rise of emerging economies, the global transition to green energy, and the digital transformation of everything. As an investor, you should also be thinking about these major shifts. Where will the growth come from in the next 10 or 20 years? Investing in themes like renewable energy, artificial intelligence, and healthcare innovation, both at home and abroad, could position you for long-term success. Finally, this is a reminder to stay informed but not to overreact. The financial world is complex and constantly changing. It's easy to get caught up in fear and speculation. BlackRock's moves are not a doomsday prophecy for the American economy. The US still has incredible strengths, a culture of innovation, deep capital markets, and a resilient workforce. However, their strategy does highlight potential challenges on the horizon, like persistent inflation and increasing global competition. In conclusion, BlackRock's $10 trillion pivot is less of a dramatic exit and more of a smart, calculated recalibration. They are not abandoning America, but they are expanding their horizons in search of growth, diversification, and higher returns in an increasingly complex world. For the average person, this is not a signal to panic, but a valuable insight into how the smartest money on the planet is navigating the future. It's a powerful reminder to think globally, diversify your own investments, and keep your eyes on the long-term trends shaping our world. By understanding the why behind BlackRock's strategy, we can all become more informed and successful investors. Thanks so much for watching. If you found this analysis helpful, please hit that like button and subscribe for more content on finance and investing. Let me know your thoughts in the comments below. See you next time.